As you know very well, we are celebrating 21st anniversary of Smart VRC. And hi, this is A.K.S. Nani from Smart VRC. So the topic is how to maximize stock returns in the next 12 months. Yeah, as you are aware, last 8 to 9 months have been very hectic, and in fact, there was a very steep fall and equally steep rise. In fact, I have not seen such a spectacular rise since 1989, and future is also pretty uncertain. There are many opportunities, there are many challenges. So let's see how we can have various case studies, case scenarios, and how we can plan our investments or disinvestments. So some of you may not have come yesterday. Just to have a repeat of the top 7 secrets what we have discussed yesterday. So the number 1 was, it is the post and not the pre-market swing actions that make the difference. Yes, always, I have never tried to predict what the market is going to do. But whatever way the market goes, if there are sharp swings, then definitely it's time to make changes in your portfolio. Because those are the times when there is highest level of market inefficiency. You all must agree that stocks like even Infosys came down to 500 levels, even below 500 levels. And today it is more than 100% up. It's in a matter of 9 months. It's only a dream. No one could have ever imagined in the month of January or February that you will get an opportunity to buy Infosys at such low levels. And not only that, that stock will rise more than 100%. So it is because of the inefficiency in the market. Whenever there is a sharp swing, investors, it is the emotions which play and not the rationality. The number 2 is the most important human organs that play a key role in profits is the brain, the heart, stomach. Stomach to digest the ups and downs, heart to get an attachment or detachment regarding the stocks, and brain naturally to find out the real worth of the stock, to find out, to study the balance sheet, to study cash flow, etc. Third, the learning was to remain invested fully and always. What I mean to say is, since I cannot predict the market, it is better to remain invested. And the number 4 is, dividend says a lot, and that too loudly. Go back and find out the companies which have fallen steeply during last 2 years. When I say steeply means which have lost more than 90%. Were they paying the dividend? Or what happened to the companies which were not paying the dividend and now they are paying the dividend? You will get the answer. The number 5 is, focus on the company story, not on the stock losses, because it is the company story which will deliver the profits. And the number 6 was, high priced mid and small cap stocks sell cheap often. Yes, because it is the mainly it is the retail investor who invests in small and mid cap stocks, and the stocks which are high priced. When I say high price means more than 1,000 rupees. Generally, retail investors are not interested in investing in such stocks, and as a result, they go cheap. And last but not the least, in the long term, it is the stock that counts and not the market. We have seen this multiple times, and even last week, there was a webinar wherein I demonstrated you what would have happened if you had invested every time at the peak of the market in the previous 30 years or 25 years. Go back and find out, had you invested at the peak, last day, last final bull run of the day, had you invested in Sensex, what kind of returns you would have got? It is 50% better than the bank FD. You are worried. Anyway, you cannot find out the top, and even if it is a by chance, out of so many thousands of days, if you are invested at the peak, then also you are a gainer. Well, that was the crux. That was the summary of the yesterday's webinar. And today we are going to see what are the factors which are going to play, which are going to decide our actions in the next 12 months. First, the updates. About 12 crore people lost job worldwide, and that is in the formal sector. And in our country, in India, employment fell by 20.3% in Q1 and 3.5% in Q2. In November, that is just last month, the employment stood at 39.3 crore. Yes, out of our population of about 135 crore people, 39.3 crore are employed. And this is exactly, or I can say about 1 crore less than what it was in the month of March. So 1 crore people have lost the job. And mainly these are the people from micro, small, and medium enterprises. And these are, in addition to this, the people from unorganized sectors. So that much of the GDP you will lose. These 1 crore people, they must have availed the loans. They must have purchased the items on EMI basis. There is a great possibility that many of these investments may go NPS into the books of the banks and the NBFCs that these institutions will have to bear. Not only that, 1 crore means out of 40 crores, 1 crore, that accounts for 2.5%, and that is the loss. That is the loss to the whole economy. Lots of people are left with reduced savings due to pay cuts. Yes, apart from the loss of employment, several people have seen their pay being cut. Not only that, even those people who are getting the same pay, I mean, there is no pay cut from the employer. Even they are very cautious while investing. So all these factors will definitely show up into the economic growth. Also, there is a lot of demand-supply mismatch within the country and even at the global level, because there are strict lockdowns in some parts of the country, and then gradually, in India at least, now there is hardly any place where there is a strict lockdown, but at global level, still the economies are suffering, and especially the developed economies of US and Europe. So there is a demand-supply mismatch. As we have seen that there is a loss of employment, also there is a sense of security, and also there is a pay cut. All this should definitely lead to a reduction in domestic demand. And exports have also contracted because of the slowdown. The main economies, the big economies of Europe and US, as we have discussed. And vaccination has already started in these countries. Hopefully, in the next 6 to 9 months, exports should also show up as far as the India is concerned. More domestic inflows into the equity are expected because of the low prevailing interest rates, and this I can certify, because I received large number of calls from investors who have never invested in equity, and they are mainly investing into the bank FDs, and now they are shifting to stocks, shifting to direct investment, and even shifting to mutual funds, because the bank returns are pretty low and sustenance is really very difficult with those low returns. Reason is inflation is also high. So actually on net basis, our returns are almost zero, because 5% or 5.5% is the bank FD rate, and same is almost the inflation. Inflation is expected to rise further, and really it is very difficult. More updates. FPI inflows. FPI means foreign portfolio investors. Their inflows into the Indian market may dampen, and we all know that almost daily market is rising, and it is mainly because of the foreign inflows into the Indian market. Domestic mutual funds and institutions are selling, while foreign portfolio investors are pumping money. And as the normalcy returns in the developed countries, the developed economies, definitely some part of this money will flow back to their countries. So that also we have to consider while making investments. Technology transformation is likely further increase. We have seen the fruits of technology. Even if I see to myself, I used to visit several cities for seminars and workshops. And due to COVID, we have come down to webinar. And I find that webinar is a much better and effective medium of sharing the learnings and giving advice to the investors. So definitely, many, even big organizations, they have realized that work from home is a better option in many respects. Budget. Yes. From January onwards, market will move to the expectations from the budget. Every year it happens. And within a month, rather I should say within 10-15 days, investors forget what was the budget. But then expectations are expectations. And more so this time, because of the COVID, there are high expectations from the budget. And we will see what our finance minister has to say and what idea, what kind of investment they're going to make, government is going to make. Yes, infrastructure development is likely to remain the focus, because that is the fastest way to create employment, and there are multiple benefits of that. And already a lot of orders are being given regarding the road infrastructure development, road construction. Let's see what else is there. And even the company like Larsen and Toubro is receiving large number of orders. Recently, the data has come regarding the ease of doing business, and India is up by 17 notch and ranked 63rd position by the World Bank. It is really a good news from stock investors' point of view also. As we all know, GDP shrank by 23.9% in Q1 and 7.5% in Q2. So technically speaking, India is in recession. More updates. No, this is from my side. In general, large and small cap stocks are overvalued at current juncture. And we should be very, very careful. More so about the small caps. A lot of speculation is going on. And I've seen many penny stocks which have increased by 400%, 500%, like that. So be very careful. Invest only in good companies available at attractive prices. That is the mantra. That is the ultimate mantra of making profits from stock market. As you must be knowing, many of the automobile OEMs, they have declared that they are going to raise prices from January 2021. Only 2-3 days left. And the companies which have already declared are Mahindra and Mahindra, Maruti Suzuki, BMW, Honda, Hero Motocorp, and Honda Cars, Ford, and Renault. Also, there is a good news. Companies like L&T, Indian Oil Corporation, Infosys, Tech Mahindra, ICICI Bank, Kotak Mahindra Bank, and a couple of more companies have filed higher advance tax. They have deposited higher advance tax compared to the last year. That is a very good sign. So this was all about the updates and some statements by the leading experts. Here is Aditya Nair, this principal economist at ICRA. A tentative recovery in volumes is underway, which is being counteracted by rising raw material prices and, to a smaller extent, employee costs. We expect the recovery to continue, albeit with a mild contraction in Q3, followed by a muted growth in Q4. So from Q4, we are expecting positive growth in GDP. Let's see what others have to say. RBI, abstracting from the inherent flux in high-frequency indicators, the underlying trend would reveal that the pickup in momentum of economic activity that commenced with the onset of the second half of 2021 is sustained. Recovery is sustained. That is good. Our finance minister, for the present, I am not going to allow the fiscal deficit number to worry me, because there is a need and a clear need for me to spend the money. So it is very clear that finance in the forthcoming budget, fiscal deficit is going to increase. So government is planning to invest in the economy, invest in infrastructure development. A sustained good positive recovery is what I see from the beginning of the next fiscal. More about the economy from the finance minister. We shall definitely sustain the momentum on public spending in infrastructure. The budget-related inputs which you gave me, I'm quite happy and eager to take on board. Something that certainly will feature is we shall definitely sustain the momentum on public spending on infrastructure, because that is the one way we are sure that multipliers will work and the economy revival will be sustainable. Mr. N. Chandrasekaran, he is the chairman of Tata Sons. India's strength is our largest talent pool, and we can leverage this to become a key player in the global value chain. Vulnerabilities exposed by the pandemic and the new geopolitical order only accelerates this opportunity, and the time is now. He's very optimistic. So these were the statements by the leading businessmen and the leading personalities. That gives a ray of hope and moderately good confidence also in the economy. And the data is here. This is the industrial growth, as you can see, from the month of April 2020 to October. Certainly very positive and very inspiring. Now, considering the sector-wise, what are the prospects and what are the current valuations? Is my personal opinion. So the first column is the current valuations, and I say high. High means valuations are high, and this for the sector of auto and related. I mean auto OEMs. That includes Maruti, Mahindra, and Mahindra and likes, and also related means the auto ancillaries and the other related sectors. As far as the forthcoming 4 quarters are concerned, there is a March, June quarter, and then September quarter and December quarter. S means there can be a likely selling pressure. Okay, currently the trend is up. Trend of the number of vehicles sold is definitely up. But in the September quarter, when we compare on year, definitely the growth may not look that positive. Also, there are other factors which may slow down the growth in auto OEMs especially. And the reason we know very well, there was a pent-up demand, still it is going on. Also, the need for a separate vehicle, low raw material prices, and that is why a lot of discounts offered by the OEMs. All these may not be there in the coming 6 to 9 months. So this is only indicative. Don't take it that this is going to happen. This is only a likely scenario, case scenario. These are the metal. Sorry, this is not a metal. This is a coal price. Coal price is up by 70% from the lows during the last 9 months. Coal prices are up 70%. Steel is up by 26%. Copper is up by 71%. Aluminum 167%. And crude, we all know, is 140% up, and there is not from the lowest run, because the lowest run was negative, and that was only for a few days. So what I have taken is the bottom form just before the I can say that before the end of the month of May. And at that time it was about $12 per barrel, and today it is something about $48 per barrel. So crude is also high, the running cost is high. Now, the first one was what we covered was auto and related, that was domestic, and now auto and related exports. Yes, there are companies which are into the exports also. In the OEM, I'm talking about, and in the auto ancillaries, there are a lot of companies which are exporting, and their revenues will get a boost when the vaccination will reach to some considerable level in the developed economies. So from 6 months to 9 months from now, their exports are likely to take a pickup. Already there are signs, there are good auto ancillary companies which are exporting to the developed countries. And presently their valuations are low. So often I am saying that I'm telling you something about the developed economies again and again. Why? Because we should appreciate the size of these economies. Consider the United States. United States has a global economy pie of 25%. So out of the total global economy, US alone accounts for 25%. European Union 21%. So you add up these two, US and Europe, it is 46% of the total global demand, total global economy. And now compare India. India is 3.36% only. So that is how the opportunity is there from the export perspective. Coming to the third sector, and that is agrochemicals. As we all know, agriculture is doing very well. And surprisingly, despite doing very well, despite good monsoons, despite good stimulus provided by the government, the agrochemicals and the related stocks in general are low priced and are available at attractive valuations. So across the year, there can be a good demand for agro and related stocks. Coming to the banks, banks are moderately valued as on date. And as I said, about 2.5 to 3% of the employment has been lost. Definitely, we are going to have NPS, and maybe from the March quarter, we'll see the impact of the NPS on the banks and NBFCs. So from 6 months up to 6 months, there can be a selling pressure, and afterwards, when the NPS will be taken care of, there can be again a buying may emerge in the banks. This is only a likely scenario. Things may go here and there. Coming to the cables, cables are very attractively priced, and I don't know why. Their performance is pretty well, and they offer good opportunity to invest. And as such, cables are not related to any particular sector. They serve to the power sector, they serve to the households, they serve to the automobiles. So they are serving to the various sectors. Cement stocks are high priced, no doubt. And recently, about 15-20 days back, I somewhere that government is inspecting. They are suspecting the formation of a cartel among the big cement companies, and moreover, due to the demand from the real estate sector, cement cement consumption was pretty high, and the input costs were low. But as we have seen, now the crude is up, even the coal is up, so the cost of production for cement may go up. And moreover, most of the leading stocks are already overpriced. There are stocks available on small caps, attractively priced, but not many. So I expect that for the March quarter, results may not be as good as per the market expectations. Coming to the chemicals are moderately priced, and as the developed economies they come out of this slowdown, definitely demand should spoil, and there can be a good rally in chemicals, especially in specialty chemicals. There are general chemicals, commodity chemicals also. There we should not expect very high growth rate, but in specialty chemicals, yes, there is a scope, and some of the leading companies are already overpriced, but in general, the sector is moderately priced. Coming to the FMCG, most of the stocks are overpriced, and I would not like to comment on quarter-on-quarter basis or even for the whole year because it is not cyclical, and I would advise to stay away. Not from the point of view of that it is risky, but from the point of view of the returns. It is not only the risk, we should also consider the returns, how much returns we are expecting, and the sector which is already overpriced, overvalued, then definitely there are other sectors available where we can invest, and with the same kind of low risk, we can get high returns. Then coming to the hotels are very attractively priced, and people are worried because of the short-term measures taken by the various states. Like for the New Year celebration, it was decided that in many of the states, it has been decided that there will be night curfew, and this sector stocks came down. So this is a short-term phenomena. Always look ahead, look 1 year hence or 2 year hence, and then you will find that there is a scope for 40% or even 50% appreciation in some of the hotel and associated sectors. IT is moderately priced, and lot depends how the developed economies they increase the orders or what happens. And people should differentiate between the IT and the technology. I'm talking about only the IT. IT is kind of a service sector, and technology is the real technology. Like Tata Elxsi is more into technology. So next is infrastructure. I see a good demand for the next 6 months, and among the leading infrastructure companies, L&T is the number one, the leader. And there are not many big companies in this field, so be very careful while selecting the stocks. Metals are high priced. Metal stocks are high priced, and metal prices also we have seen they are at very high rates. It is difficult for these prices to be sustained, and moreover, these metals are cyclical stocks. It is really whenever you find a very low P ratio, that means we are near to the peak of the cycle. That is how the metals, how the cyclical stocks or the sectors can be valued. So be very careful. And we have seen last year how there was a demand mismatch for graphite electrodes, and how people first gained handsomely on this graphite India and HEG, and then we also saw how these stocks fell down by a couple of 100%. Yes, so be very careful. NBFCs, this is a very interesting sector, and many NBFCs, as we all know, are growing by a good amount, very good rates. And overall, I think still there is a scope for increase in valuations for NBFC. But as I said, the NPS may rise for the next 2-3 quarters, and thereafter, different growth trajectory will begin. And many of the small NBFCs have wound up, and that market share will go to the bigger ones. And many big NBFCs, many means I mean to say a couple of big NBFCs have already closed their shutters during last 2 years, and that benefit, that share will also come to the existing medium and big NBFCs. So there are immense opportunities here. Packaging is very low valued. FMCG stocks are overvalued, but the companies which serve to these FMCG companies are valued very lowly. I don't know what is the reason, and they need a better valuation. And most of the packaging companies are very lowly priced. Coming to the paint, they are already very high priced, and there is no reason that they should command such high valuations. So I would not like to advise to buy any paint company. Paper, they are moderately priced, and I don't expect any sudden jump in paper demand. Already people have realized that it is possible to reduce the paper usage by working from home. And also the growth rate of this sector is pretty low, about 6% every year. So there is not much scope. Pharma, it is moderately priced. Real estate, it is high priced. And because of the low rate of interest, there is a demand. And a lot of reasons we have already discussed regarding the automobiles. The same holds good for real estate. Coming to the technology, there are very few companies engaged in real technology in India, and they are moderately priced. They are not highly priced. Still, there is a scope, and scope will remain for next 2-3 quarters. So all this was about the probable scenarios going ahead, and opportunities will keep rising. And whenever such opportunity arises, buy in big lots, invest considerable amount in them. Or if you don't have the money, then you can restructure your portfolio at that time. As I said, whenever there is a large fluctuation in share prices, a lot of inefficiency creeps in, and take advantage of that. That matters a lot. That can make a big difference in your total returns going ahead. So there is a quote by Mr. Warren Buffett. He says that when it rains, don't go out and collect water in a nimble. This is a small nimble, but take a big bucket to collect that water. So there are a lot of investors who have created liquidity in the month of March, April, May, and they were expecting the market to fall down further. And now they are sitting with cash, and there is a fear of missing out. Yes. So don't get desperate. My advice is be very vigilant, invest very carefully. Don't just invest in any stock. Behind every stock, there is a company. Try to find out what that company is doing and why should you buy that stock. Okay, who is the CEO? What are their plans? Yes, it requires a lot of effort, a lot of study, or you can hire a good advisor. And that is the right way of riding the stock market moves. So during last 2 years, there are many stocks which have given tremendous returns. At the same time, there are many stocks which have lost heavily. So one should be very, very careful. And these are the list of stocks. And during this time, BSE Sensex is up by 33%. So the market is saying, as I keep saying, it is the stocks in your portfolio which will give you the returns, not the market. The market was same, and you can see the returns, how divergent are the returns. So it is the company. You should select the company very carefully. In our premier product, Smart Gains, during this calendar year, 2020, these are some of the top performance. Cosmo Film advised at 242, presently it is 462. Apollo Tires at 97, it is almost double at 181. These are the current today's prices. Hester Bio up by 60%, Infosys up by more than 100%. So, and the next one is the Smart Multibaggers. This is another product. Here, the Mothers and Sumi was advised at to be 60. Today it is 158. It is more than 150% up. Advanced Enzyme is 200% up. Caprihance has become 3.5 times. So it is not because of just luck, just a sheer luck. Go back and see the performance of these companies. They have performed pretty well. Those who want to know more about our products, they can visit our website, smartverc.com, and they can visit the products. Even we have offerings under Smart Academy. There are other resources, important resources you can find out. Philosophy, calculators, retirement calculators, investment calculators. And if you have any confusion, you can always contact us. Smart word, be rational. What is true is true. Don't just hold on to the stock because you are in loss. Always go with the results. This is one of the feedback we have received from Mr. Ravi Nair, Mumbai. Sir, your video on stocks will always outperform other assets. What's superb? The reasons were convincingly explained logically in a very simple and lucid way and was ably supported by charts which made understanding very easy. Thanks. Looking for more. We are very thankful to all of you. I keep on receiving many feedbacks. I cannot share all of the feedbacks here. So after this presentation, we are going to have question and answer session. Participants are requested to write their questions in the chat box, or even you can raise your hand. And I will ask you to unmute. Thank you. Thank you very much. Okay, Mr. Ashish Diwan. Ashish Diwan, kindly unmute yourself.
Yeah, good evening, sir.
Good evening.
Yeah, thank you, sir, for the wonderful presentation. A few sectors I would like to know from your side. One is the financial sector.
Yeah.
What about that?
We have covered the banks and NBFCs. We have covered in the presentation. Definitely, in the next 6 to 9 months, there will be a pressure on account of NPS. But after that, we are going to have an uptrend.
Okay, and sir, hospitality sector.
Hospitality, it will take about another 6 to 9 months.
Entertainment sector.
Sir, most of the things will be as usual as we were living pre-COVID levels. And because we were at home, so we were using the other OTT services and all those things, and we were very happy. We are very happy with that. But I'm very sure once the cinema and all those things start, we are again going to visit those cinema halls and all those things. Most of the things will become normal. So it is only a question of time. And moreover, whenever you are investing in such stocks, be very careful the amount of debt these companies have, because it may not happen that by waiting for another 6 or 9 months, those companies may go bankrupt. So be very careful.
Insurance sector.
Insurance has it has not been impacted. There has been only a slight positive premium increase, but otherwise it does not have any major impact.
Okay, thank you, sir. Thank you.
Mr. Gajanan?
Good evening, sir.
Good evening. Good evening.
Sir, you have covered very positively, and what always the stock price is a future price, and that you always see, and that we also get. I'm one of the member associated with you from last 2 years.
Yeah.
The way I started following your principle, sir, so that other people should also learn. From 18 years, I had lost in the market. From last 2 years, I'm able to get the advantage of vision now, so that we are able to select the stock on our own also with your continuous guidance and continuous input provided.
Mm-hmm.
I like to thank you. You had given other sectors performance. What about the housing sector and housing finance? Because there is a quite rise in the metropolitan cities registries and housing demand.
Yeah.
And even government is also promoting the rented housing scheme, and which shares, which sector is going to be have the benefit in last lower valued now and future. It can be good profits for this company, sir.
Yeah. In the housing and housing finance sector, there was a spurt, definitely.
Yes,
and that was because of especially the Maharashtra government. They have reduced the registration charges by 10% to 8%.
Yes.
That was only a psychological boost. Otherwise, if you consider the house price of house, 2% is very small amount. But nevertheless, that trick has worked. And also, there was a lot of inventory with the developers, with the owners of these projects, and they were fearing that if the COVID continues for a long time, then they will go bankrupt. So they have offered heavy discounts, and people have grabbed that opportunity. Otherwise, if you think, many companies have opted for work from home. So people who are staying in metros, they will definitely switch to their home place. And already I'm getting the feedback that they are not, people are not able to get the proper rent. They are getting reduced rents, and house availability has increased. And there is always an urge in an individual to buy his own house, and they took this opportunity because of the low interest rates and also the incentives provided by the government or the state governments. And that is why there was a spurt, and also there was a little bit of pent-up demand, because for 3 to 6 months there was no buying and selling. But I don't see any major reason that this should continue, because, as I said, about 2.5% people have lost the jobs, and many have seen a pay cuts. So it is very natural that people are not going to invest so freely what they used to invest before COVID area. But individually, as far as the housing finance companies are concerned, yes, there are, as I said, there are cases where, especially NBFCs, they have got good opportunities because of the small NBFCs and housing finance companies. They have closed down their shops, so that share may go to the bigger NBFCs. That is all I wanted to share about housing finance. Okay. Mr. Ashutosh Vyas.
Hi, good evening, sir.
Good evening.
Actually, I attended your session yesterday as well,
Okay.
but missed the question answer part of it partially.
Okay.
There was a particular query by a gentleman which was
Uh-huh.
about investing afresh. I mean, I would be falling under that category where I would be starting afresh new.
Mhm.
There was some mention of a corpus of 86 lakh. There was some mention of replication of the funds, replication of advices which you have already given to the investors. Could you kindly clarify on that in layman terms so that I could also understand?
Okay. What that gentleman was talking about, there is a basket of stocks, about 18 stocks, with the name of SBP. That stands for Smart Billionaire Picks. There is a basket which was started on 30th of May 2001. So it was started about 19 and a half years ago. And we are making changes only once in only on Wednesday. Not necessarily that we are making changes, but we get an opportunity to make changes only on Wednesdays. So that basket started with a notional amount of rupees 1 lakh, has reached to 86 lakhs. Today it was 87 lakhs. So 1 lakh has turned into 87 lakhs in 19 and a half years. And that amounts to a CAGR of 25.5%. Now that gentleman, he was asking that it is already 86 lakhs. And the people who don't have that much of amount, how can they take advantage of that? So what I said is, you can invest a fraction of that amount. So you can invest, say, 8.7 lakhs, and you can copy that stocks and their weightage. So that is one way. Otherwise, you can follow our other products which are similar basket type, like Smart Freedom and Smart SIP. In Smart SIP, you will get an advantage of investing every month. I cannot say advantage, but another opportunity rather. So that is what is about the 86 and 87 lakhs. Is it okay? Need more clarification? Mr. Raghu. Yes, sir.
Firstly, thanks a lot for your valuable presentation.
Thank you.
So if I may ask, during the presentation, you suggested that it is also advisable to invest in multi-baggers, and you gave 2-3 examples.
Yeah.
So if I may ask, which are the potential multi-baggers right now, in which we can invest?
Mm-hmm.
That's the first question, if you are allowed to answer.
Okay. See, we are professional advisors.
Okay.
So I cannot advise the stocks on open platforms.
Okay.
And it is quite possible that we have already advised that stock in our advisory services. So that would amount to.
Yeah, I totally understand and appreciate.
Yeah. So one thing is that if you subscribe to any of our services, then you will get an opportunity to see all the past advices also. So that way, you need not have to wait for the forthcoming advices. You will get instant access to our past issues, all the past issues. Or say for smart gains, you will get access from since beginning, whatever we have advised. So it is possible that during last 3-4 months or 6 months, we have advised some stock which is still available at lucrative price, then you can buy. So that is the best I can. And also, we are going to publish a stock research which shall be available tomorrow, probably tomorrow. I will try to get it published tomorrow itself, and it is free for all. It's free for all public, all my subscribers, and that from there you can get a glance at what kind of research we do. And for that, are you available on? Are you present in our WhatsApp group? In any WhatsApp group from where you get this message?
I got message about this webinar from one of the WhatsApp groups. I'm not sure if you are part of that, or if your research reports are circulated in that group. I'm not sure about that.
So you can write down our number,
Sure.
and it is 9755
9755
920 780
920 780.
0. You can send a request here, and I will include you in one of our groups.
Sure.
Okay.
Okay.
So,
And
yeah.
sure. Another query was that actually I am also an investor, more of an investor rather than a trader.
Okay.
But generally, when it comes to large cap stocks or blue chip stocks, for some reason, I tend to get married with the stock and I don't feel like exiting.
Yeah.
According to you, what should be the correct exit strategy?
Sir, that is why I covered one thing. There are 3 human organs which help us or which stop us from making profits, and that is brain, heart, and stomach. We should not get married. Whether we are, the stock is profit making or loss making, that is a separate issue. What we should consider is the growth prospects ahead. That is the main thing required, and the growth prospects should match with the P ratio.
Okay.
So it is not, P ratio should not be seen as a standalone. There should be a proportionate rise in earnings per share.
Okay.
That is the right way. That is known as the PEG ratio. You can search the net and you will get, or you can visit the website investopedia.com. There you will get a good description about the PEG ratio, and that is the right way of valuing the growth stocks. Ultimately, every company wants to grow steadily.
Yeah.
I hope I have replied to your queries.
Yeah.
Thank you. Thank you very much.
Sure. Thank you.
Mr. Ramchandra.
Hello, sir.
Hello.
Can you hear me, sir?
Yes, yes, I am able to hear you.
Thank you, sir, for this very magnificent webinar. This is as informative as the before.
Okay.
I heard other participants' query, and most of my queries are answered in this answer and question sections.
Okay.
But I have one question that nowadays there is a buzz in market, in media, that in January the market is going to crash.
Okay.
And last in 2008 and 2016 and 2018, all the time January is the month when it is going to crash. So in this scenario, what should we do? Perhaps we have in some stock 50% or more gain. Then what should we do? I follow your advice and I am very happy with that. But even though I am very fearful when such kind of buzz is going on, and I also maintain the portfolio level as you have suggested. So this is my query.
Okay. This is very interesting, and I'm very sure there are other investors also which are sharing the same view. So in short, what I can say is that Smart Billionaire Picks is there from more than 19 years. So we have seen 19 Januaries, and still it is 25.5% up CAGR basis. So no need to worry about the January. Every year it will come. Okay. Yes, Mr. Anand Joshi. Kindly unmute yourself.
नमस्कार सर।
नमस्कार सर।
मेरा एक सजेशन है आपके लिए।
जी सर, बताइए सर।
आपने जो 2001 में जो पोर्टफोलियो चालू किया था 1 लाख से, ऐसा अभी नए लोगों के लिए नहीं चालू कर सकते, जिससे आप काफी सारे लोगों को बेनिफिट मिल सके?
सर बेनिफिट तो उस एग्जिस्टिंग पोर्टफोलियो से भी मिल सकता है, और अब मैं आपको इसको थोड़ा दूसरे तरीके से बताता हूँ कि हमने 1 लाख से शुरू किया और 2011-12 में वो करीब 50 लाख रुपए हो गया। अभी 50 लाख में भी अगर किसी ने इन्वेस्ट किया होगा 2012 में, तो स्टिल इट इज अप बाई 50%, 60%। So it is not the ये कोई जरूरी नहीं है कि हम कब से शुरू कर रहे हैं. What matters is कि हम उसमें कौन से स्टॉक्स रख रहे हैं.
अच्छा.
अभी हम 1 लाख से 87 लाख पे पहुंचे हैं आज 19.5 साल में. आई एम वेरी श्योर कि 2021 एंड से पहले हम उसे 1 करोड़ तक आ जाएगा. तो अगर हम 20 साल में 100 टाइम्स मल्टीप्लाई कर रहे हैं तो अगले 20 साल में और 100 टाइम्स हो जाएगा और ये 1 करोड़ का 100 करोड़ हो जाएगा.
राइट.
एंड मैं भगवान से प्रार्थना करता हूँ कि वो मेरे मतलब व्हेन आई एम अलाइव and I should reach to 100 crores so that मेरा जो way to billionaire, that is how the title of the book have come, way to billionaire. जो मैंने किताब लिखी उसका टाइटल way to billionaire इसीलिए है कि हम 1 लाख से 100 करोड़ के रास्ते पे हैं. तो उस रास्ते में जाने के लिए हमें क्या क्या चाहिए, that is what I share.
राइट. बेस्ट लॉक. उसके लिए हमारी तरफ से पूरी शुभेच्छा आपको.
थैंक यू वेरी मच सर. थैंक यू.
हाँ, लेकिन ऐसा कुछ नया प्रॉस्पेक्ट निकालेंगे तो सबको ज्यादा बेनिफिट मिलेगा. एक की जगह पे आप 5 से भी चालू करते हैं, 5 लाख से भी चालू कर सकते हो आप. हमारा सजेशन है सर.
हमारे पास
हमारा सजेशन है.
हमारे एक स्कीम है सर स्मार्ट फ्रीडम, उसकी वैल्यू अभी 19 लाख है. तो यू कैन स्टार्ट विद दैट आल्सो. वो हमने 10 लाख से शुरू किया था.
अच्छा.
तो उसको भी आप ज्वाइन कर सकते हैं.
ओके. थैंक यू.
फिर भी आपने सजेशन दिया, आई एम वेरी थैंकफुल टू यू. और इसके बारे में बहुत डिमांड आ रही है. वी विल कंसीडर कि हम क्या कर सकते हैं, क्या बेस्ट कर सकते हैं.
राइट.
थैंक यू वेरी मच सर.
थैंक यू वेरी मच.
मिस्टर हसन लद्दा. यस सर. आपकी आवाज नहीं आ रही है सर. We are not able to hear your voice, sir. Mr. Hassan Ladda.
Let's drop it then. I'll email it to you.
Mr. Amit Desai.
Yeah. Good evening, Mr. Asnani.
Good evening, sir.
Again, a very good presentation. Just
Thank
a couple of very quick questions.
Yeah.
On the sector valuations screen, you had, of course, you had the valuations low, high, moderate. What was SB and a hyphen in some of the spaces?
Yeah. There are 4 symbols: B, S, hyphen, and N. N means neutral, and dash, hyphen means we can't say anything. It is very difficult to predict what will happen in the next 4 quarters. So wherever we felt like how we can compare on quarter basis, or when the other economies will come out of this slowdown, based on that we have tried to give you an idea. And D means buying may emerge in that sector, and S means the selling. And
B,
I can.
So B was buying and S was selling. Okay.
Yes.
Okay.
And I can see from the chat box, Mr. Milan Shah has also asked the same thing. What was B and S in the sector-wise charts? And he was right. Does it means buy and sell?
Yeah, that's what I thought. B and S obviously leads to. Just wanted to reconfirm. And the other thing, you spoke about those sectors, and I think basically what you're very bullish on in terms of prices still being attractive or moderate is the agricultural space, including agrochemicals, then specialty chemicals, NBFCs, and not necessarily IT. But maybe IT, but I think you're more bullish on technology stocks, which is slightly different from software services.
Yes.
Yeah,
definitely. And it is not like that. If I say that I am not FMCG or high-priced sector, that does not mean that there are no stocks which are attractively priced. This is a general perception about the sector. But stock-wise, there is a potential. Like in auto ancillaries, there are stocks which have good potential, especially those which are catering to the export markets.
Yeah. And any view on platform businesses or contract manufacturing businesses? When I mean platform businesses, I'm talking about stocks like IndiaMart, InfoEdge, of course, very highly valued today.
Yes.
So is that the only reason you've not mentioned about that, purely because of valuations?
Yeah, it is because of valuations only.
Acha, okay, all right. And anything on contract manufacturing? Like Dixon or Amber, again, highly valued, but growth opportunity also seems to be massive.
See, a stock which is already quoting at a price of, at a P of 100 plus, I would invest in that stock only if I get a confidence that that company will grow at the rate of 70 to 80% every year for at least next 2 or 3 years. Then only I can invest. Because if the company fails to grow at the rate of 40% plus, then definitely it is a very risky stock. And growing at the rate of 40% plus
is a tall ask.
for 2-3 years requires a lot of, there are very few companies, but definitely because the government has come out with the PLI and this Dixon seems to be a very serious player, but a lot of those growth rates for next year and next to next year are already discounted. So I would like to wait for the opportunities. We will get the opportunities. The stock market is a very beautiful place where you will get a lot of opportunities to buy cheap and sell high. So I would love to wait rather than invest at current high valuations.
Okay. All right. Thank you. Thank you so much.
Thanks. Welcome. So with this, we have completed all the questions and okay. Somebody has asked that how much cash we should have in our portfolio so as to invest during correction, and what should be the PEG ratio. It is like this. I don't advise to keep cash because we cannot predict the market. We cannot predict the correction. And when I say correction means it should be minimum 15%. Then only it is advisable to invest. Otherwise, small corrections does not matter. When you are targeting 25 or 30% returns, and if there is a correction of 2% or 3%, then there is no point in averaging no. So I would never ask you to keep cash. And second is the PEG ratio. PEG ratio above 1.8 or above 2. I would like to start making an exit. Previously, it was 1.5, then I increased it to 1.75, and now it is 2, because quality stocks are available, but at very high valuations. So, and also the cash, there is a lot of liquidity available from Indian market as well as from the overseas. Valuations have increased. So we should also increase our bar, and PEG ratio of 2 would be a trigger point. What is the ideal ratio of keeping debt and equity? So that depends on individual. What I can say is that you should have considerable amount of your total investment in assets into equity, and the thumb rule is 100 minus your age. So if you are 40 years of age, so as per this thumb rule, 100 minus 40, that is 60%. So 60% of your total investment should be in stocks. This investment excludes the house where you are staying. Mr. Rajkumar Maheshwari, kindly unmute yourself. Mr. Rajkumar Maheshwari.
Hello.
Yes, sir.
Namaste, Mr. Asnani.
Namaste, sir.
Sir, I have one question.
Yeah, please.
सर, राकेश जुजनूवाला के पोर्टफोलियो में एक ऐसा शेयर था जिसका वेटेज भी सबसे ज्यादा था और उसका वैल्यूएशन भी सबसे ज्यादा था. तो उन्होंने सर ऐसे शेयर को कैसे कलेक्ट किया? उन्होंने उसको 70 रुपए में भी खरीदा और 700 में भी खरीदा.
जी.
तो वो कैसे उनकी सर क्या पॉलिसी चाहिए? व्हाट इज द स्ट्रेटजी? उस शेयर का सर नाम था टाइटन.
या. और आज भी मेरे ख्याल से सबसे ज्यादा उनका इन्वेस्टमेंट टाइटन में ही है. ऐसा रहता है कि ये जो पॉलिसी है, ये कंसंट्रेटेड पोर्टफोलियो होता है. इट इज नॉट ओनली कंसंट्रेटेड पोर्टफोलियो, बट किसी एक स्टॉक में आपका 50% से ज्यादा इन्वेस्टमेंट अगर आप रखते हैं, तो यू शुड हैव वेरी स्ट्रॉन्ग कन्विक्शन. बहुत जबरदस्त कन्विक्शन होना चाहिए. अदरवाइज क्या होगा, अगर ये टाइटन स्टॉक नहीं चलता तो उनके जो टोटल पोर्टफोलियो रिटर्न्स हैं वो बहुत कम हो जाते हैं. सो इफ यू हैव गॉट सो मच ऑफ स्ट्रॉन्ग कन्विक्शंस, देन ओनली यू शुड बाय. लेकिन अदरवाइज 50% स्टेक तो मेरे ख्याल से वॉरेन बफेट का भी किसी एक कंपनी में नहीं है. तो दैट इज अप टू यू. इफ यू हैव सो मच ऑफ कॉन्फिडेंस एंड कन्विक्शन, आप बिल्कुल लगा सकते हैं 50%. लेकिन मैं एडवाइस नहीं करता हूँ ऐसा. और मेरे हिसाब से आप 12% से ज्यादा किसी भी एक कंपनी में इन्वेस्टमेंट नहीं होना चाहिए, एलोकेशन नहीं होना चाहिए.
थैंक यू सर, बहुत बहुत धन्यवाद आपका कीमती समय देने के लिए. थैंक यू वेरी मच.
आई एम वेरी मच थैंकफुल टू यू कि आपने पूछा सवाल सर, एंड इट्स माय प्लेजर टू आंसर यू. Mr. Rajesh Babu Chokkam.
Yeah. Good evening, sir.
Good evening, sir.
Yeah.
Welcome.
Actually, last couple of days I was watching the web series of this Arshad Mehta 1992 scam.
Yeah.
So in that, he frauds all the securities, bank securities, uses money and takes up the stocks, specific stocks like Mazda and ACC, etc.
Yeah, yeah.
So in the current day, whether the penny stocks, of course, the big market cap stocks cannot be manipulated. But what is your opinion whether this rigging of penny stocks is still there, or what's the opinion about it?
Okay. I started investing in 1989, and I was there when this Harshad Mehta whole scenario took place, and that was a really very excitement was there, and the kind of increase Sensex has undergone at that time. At that time, there was, I think there was no Nifty, only Sensex was there. I have never seen again. And also I have never seen the kind of fall. The stocks fell down, and most of the investors have seen an erosion of about 80% in their portfolio, 80 to 90%. Even good stocks fell down like that. And still, I am here. And but the thing is, because we were invested in good companies, we never invested in penny stocks. And so we were able to survive, not only survive, but we were able to thrive. These kind of scenarios will keep on coming often. And in the present market, I can see a lot of penny stocks have risen, have multiplied 3 times, 4 times, even 10 times. And they are continuously in upper circuit. People are not realizing, investors are not realizing that once the same stocks start putting downward circuits, lower circuits, then it will become impossible for you to exit. So I would...
One more thing, sir, but why SEBI is not taking any action? The stocks, when there is no valuation and all, suppose a single cartel is happening, in the interest of the common man, I think SEBI should catch hold of such type of manipulation of penny stocks.
SEBI is not there to stop the manipulation. SEBI is there to stop the... of course, it is there to promote the equity cult, to promote the investment in stocks. But if there is any insider trading, if somebody is working on inside information, then of course SEBI can take action. But simply because the stock is going up, because the valuations are up, SEBI cannot do anything. Means if an investor decides, then I have to invest, then how SEBI can stop you? SEBI cannot stop.
Okay.
Means as far as the valuations are concerned, there is no formula written anywhere that these valuations are okay. There are company stocks, as we were discussing, Dixon with a PE of 100 plus, Hindustan Unilever with a PE of 80 plus, and there are stocks with paper stocks like with a PE of not even 10, below 10. So how you can decide that whether the paper sector is good or whether the Hindustan Unilever is good? So that depends on individual to individual. SEBI has no role to play in that.
Thank you, sir.
Okay.
Thank you.
Thank you. Mr. Jayanti, kindly unmute yourself.
Good evening, Mr. Asani.
Good evening, sir.
God bless you for your valuable and wonderful services you are doing to the investing community like us. I have a layman question. Could you please suggest me what will be the simplistic book on getting the understanding the fundamentals, as well as any simplistic language written website, sir? And also, please suggest me a business magazine and business daily, please, because you are expert. You might be knowing all the things. So, in a simplistic way, which as moderate English learning person can understand. Please elaborate, sir. Thank you, sir. Once again, my humble prayer for you to live more than 100 years, sir. Wonderful services you are doing, sir. Thank you, sir.
Thank you very much, Mr. Jayanti. And there is a very common question that what should we read? I would suggest you to read all the books written by Mr. Peter Lynch. Those are all very great books. He doesn't talk about any complexity. He has demonstrated with various examples. Of course, all the examples are related to the American companies, and in many ways, he is different from other investors, and still he has delivered out 29 point something returns for 17 or 13 years in a row in a mutual fund, and then he took a retirement. He is a great investor, and I love his philosophy. All the books are very simple, in a very simple, and no equations and no complex formulas mentioned. Regarding the website, you can refer investopedia.com, and even I have authored a book, Way to Billionaire. It is very simple because I am very much inspired by Peter Lynch. So I try to keep minimum, whether I can say that the only complex formula I have used in my book is the compound interest formula. No other formula, no return on equity, return on capital, all those things missing because those are not required. It is, again and again, I say, creating wealth from stocks is simple, but investors and advisors make it complex. That is the only thing I want to convey.
Thank you, sir. Thank you so much, sir.
So with this, we come to an end, and it is already 75 minutes. We are way ahead. We are way more than normal 40 minutes time period. Thank you very much for sparing your valuable time, and we'll see you tomorrow again, tomorrow at 7 p.m. Goodbye and good night. Thank you.